Travis, we have some business to attend to following last week's Heroes game. Okay?
Yeah.
If I remember right,
What would that be?
you pulled a Corso and said, not so fast.
Yeah. Thought it sounded good at the time.
Yeah, well, you were drinking some of the Kool-Aid from being at the Wisconsin game, which looked like...
Trevor spilled some,
Yeah.
and I got it.
You got it.
Yeah.
Well, the trophy's going to stay for the Hawkeyes at least maybe like 362 days, but who's counting?
Is that 10 out of 12 years?
Yeah. Ooh, yes, it is. I'm pretty sure it is.
Wow.
That's a decade.
Wow.
Yeah.
That's Anyway.
Feels good. But anyways, I love you, Nebraska fans. You're the best. But I am glad the Hawks won. Now, on to business. Following the election, markets reacts to the daily news coming out of Washington, obviously, Travis. So let's discuss a few of the dynamics that have been unfolding since the election.
So we're moving from the Husker game to elections, which are less controversial, huh?
That's right.
Yeah, okay.
Yeah, that's a good idea, huh?
Well, Steve, I mean, everything starts with interest rates.
Yeah.
The Fed has began cutting the Fed funds rate this year. They did 0.5% or 50 basis points at the September meeting, did another 25 basis points at the November meeting. Yeah. And markets are expecting, at least before filming this, I checked, about 75% chance of another 25 basis points at the December meeting.
It's pretty high.
It's pretty high, and Powell usually gives them what they want. Yeah. After that, the path, becomes foggy, thanks to the election and the incoming administration and their goals and so forth. But lower interest rates, particularly short-term rates, are very favorable for small cap companies or small companies because they tend to finance more with floating rate loans, which are tied to short-term interest rates because they're based on LIBOR. Lower rates leading to lower interest payments on loans to finance those smaller companies could lead to higher profitability for those smaller companies moving forward, which will be good for them because, as we know, they've lagged, their large cap cousins here the last few years.
So yeah, that's true, Travis. Is sticking with the small cap theme. Let's discuss regulation. Okay.
even less controversial?
Yeah, no kidding.
Yeah.
The incoming administration is favoring reduced regulations,
right,
or at least removing the unnecessary regulation. Isn't that right?
There's probably quite a bit out there.
There really is, yeah. And so that also benefits small cap companies. Large cap companies have the capital and the power to steer regulation in their favor, where small caps just don't.
Explains some of their performance as well, right?
Yeah, absolutely.
Yeah.
So this lightens that burden, coupled with lower compliance costs, could lead to faster growth and profitability for these small, innovative companies.
Yeah, no regulatory hurdles to jump over, maybe more M&A, activity moving forward. So,
True.
Yeah, the other trend we're seeing, based on the election results, Steve, is the incoming administrations tends to lean towards reshoring, right? And that's bringing back manufacturing and business operations to the U.S. from overseas. And that could increase business opportunities for small companies again, because small caps generate about 82% of their revenue domestically versus large caps, which is about 62 to 64% domestically. So that makes small caps, likely to benefit more from a lot of these reshoring efforts that we might see over the coming year. So summing it all up here, Steve, large caps have dominated markets. We've talked about the Mag 7 quite a bit.
Yeah.
I'd like to look back on our videos. We probably have a few on those.
Yeah, well, and they're still going to do well.
Yeah, and they're still going to do well. But some of the trends emerging certainly could benefit small cap companies and U.S. or domestic-based equities moving forward from here.
Yeah, that's true, Travis. Thanks so much. I look forward to it next week.
Look forward to it as well.